Today, what's next in Sam Bankman-Fried's criminal case? Coinbase reaches a $100 million settlement with New York regulators over compliance issues. And Messari's CEO Ryan Selkis breaks down his 2023 outlook for Ethereum post-merge. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto prices are in the green across the board today. As of noon Eastern, Bitcoin rose closer to the $17,000 mark. Ether added more than 3.5%, and Solana continued that upward movement, gaining 3% as well. Okay, let's talk about the top stories. First, disgraced crypto exec Sam Bankman-Fried pled not guilty in New York federal court yesterday, and his trial is expected to start on October 2nd. The ousted FTX CEO has been hit with several charges, including conspiracy, wire fraud, and money laundering. Former SEC Chairman Jay Clayton joined CNBC's Squawk Box this morning to discuss whether the criminal case could go to trial or end with a plea deal.
If all of the information that we as the public want to know about what happened here is on the table, then the question of whether you need to go through a trial and need to go through the expense is diminished.
SBF's lawyers also asked a court not to reveal the names of the two people who co-signed his $250 million bail alongside his parents. Citing court filings from yesterday, CoinDesk reported that attorneys pointed to safety concerns as a reason for the request. The lawyers said that SBF's parents have received a, quote, steady stream of threatening correspondence, including communications expressing a desire that they suffer physical harm. Next, U.S. regulators issued a warning to banks about crypto risks following the fall of FTX. In this statement from the Federal Reserve, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency, the regulators pointed to last year's events, which have been marked by significant volatility and the exposure of vulnerabilities in the crypto asset sector. Regulators said some of the risks include fraud and scams, as well as contagion risk within the crypto asset sector resulting from interconnections among certain crypto asset participants. The statement comes just weeks after FTX's sudden collapse. Last, Coinbase reached a $100 million settlement with New York's Department of Financial Services over compliance issues. That's according to statements released today from the crypto exchange and the regulator. The department's superintendent said, quote, Coinbase failed to build and maintain a functional compliance program that could keep pace with its growth, and argued that the crypto exchange, therefore, exposed the platform to potential criminal activity. In this blog post, Coinbase said the investigation focused on the company's compliance program in 2018 and 2019, as well as the compliance backlogs when the company grew in 2021. Now, Coinbase's chief legal officer said the exchange has addressed those issues. The settlement, which includes a $50 million penalty, completes the regulator's investigation. Coinbase also announced it will pay another $50 million to boost compliance efforts. All right, on to our main story. Data analytics firm Messari recently released its annual report highlighting predictions and insights for the crypto industry. And this, of course, comes within the wake of 2022 setbacks. Crypto World's Talia Kaplan spoke with Messari's CEO Ryan Selkis about his thesis and his outlook for Ethereum specifically. Take a listen.
So your firm released an extensive report late last month looking back at what happened in 2022 and looking ahead to the new year. Can you take us through some of your biggest takeaways from your 170-page crypto thesis for 2023? How would you categorize last year in a nutshell, and what can we expect moving forward, especially following the collapse of FTX?
I think it was a tough year across the board. Obviously, prices were significantly down. There was a significant amount of market stress in terms of some of the big players that were over-levered. We had a couple of high-profile frauds. We had some more than our fair share of high-profile collapses due to leverage and some contagion in the crypto credit markets, which were really through their first cycle. And we might not be at the very end of that, but I think hopefully we're getting close. There might be a couple of other dominoes to fall, but generally speaking, I think we have the worst behind us, and the market will structurally be stronger. And we'll start to see some additional applications, some real usage going through this next cycle. So this is, I think, the third full cycle that I've lived through, and I'd expect we'll come out bigger and stronger than ever. It's just going to take a little bit of time, and we'll let the foundation get built and keep iterating to build that big user base and a little bit more safety and reliability than we saw last year.
Sticking with your report, and you touched on this a little bit, but in it you mentioned that 2022 has been a, quote, bad year, especially for the greedy, levered, and the unethical. You go on to argue that the long-term builders may have been temporarily hurt by association, but that these open source software and infrastructure developers are here to stay. Now, you note that beneath the wreckage is a stronger foundation than we've had before. So it sounds to me like you're still bullish on crypto despite everything that took place last year, the scandals, the bankruptcies, the layoffs, the plunge in prices. Is that a fair assessment?
A lot of the problems that we had last year were the financialization of crypto, and they were really centralized financial players that were getting into hot water, and subject to bank runs or fraud or theft or other types of abuse that shouldn't hypothetically be possible in a true peer-to-peer decentralized kind of crypto environment. So there's a silver lining here, which is Ethereum and various scaling solutions had a huge year. Metrics and usage and adoption has been up and to the right, basically without interruption. Decentralized finance protocols were not subject to the same failures that we saw from the big exchanges like FTX and some of the big asset managers and venture funds. You saw a number of sectors in the crypto economy have quarter over quarter growth throughout the year, including things like decentralized hardware networks, distributed storage that could be a complement or alternative to things like AWS, video transcoding, a whole slew of decentralized hardware networks, and really physical infrastructure that's going to be needed as we continue to scale out the ecosystem. And then, of course, we had stablecoins, which are a pretty basic but really powerful foundation that I think the industry is currently built on. The volumes in stablecoins and their regulatory acceptance, or at least the pathway to their regulatory acceptance, I think has never been closer. So a lot of mainstream adoption, a lot of really healthy metrics have been obvious the last couple of quarters if you know where to look. But that's not to say that the market is always going to get it right. And right now, I'd argue that maybe we're overshooting in the opposite direction. If we were overly optimistic at the end of last year, things might be overly pessimistic now, and we'll balance out somewhere between the two extremes.
In your thesis, you dive into all the sectors of crypto that your team has been tracing throughout the year, including Ethereum. Now, last year, Ethereum's massive overhaul, known as the merge, finally happened after years of development and delays. How would you describe 2022 for Ethereum, and what is your 2023 outlook post-merge?
I think the merge was one of the greatest technical achievements in software and the last couple of decades. It's a $150 billion network today, Ethereum is, that migrated to a completely new infrastructure, new consensus mechanism, and basically went off without a hitch. I think the merge also had the benefit of not only solving for many of Ethereum's scaling challenges and making the protocol arguably more sustainable, at least relative to proof of work mining, but it improved the economics of the protocol and made the Ethereum holders put them in a stronger financial position, with Ethereum acting now as a disinflationary or even a deflationary currency. So an ecosystem that has just a very low rate of new issuance and new inflation that's hitting the Ethereum supply. That I think is going to give it maybe a firm place as the number 2 asset within the industry. And some people are calling for Ethereum to potentially even leapfrog Bitcoin. I think that's probably premature. And we tend to see that enthusiasm get corrected in bear markets. But I'd say that Bitcoin and Ethereum in their own unique ways had years that solidified their position in the market as the 2 dominant assets and the 2 most important decentralized networks.
How do you currently define Ethereum? In your view, is it more of a tech platform similar to perhaps Google and AWS, a distributed bank, or a combination?
I think the point that I made in the report is certainly a decentralized technology platform, right? There's all sorts of applications that can run on top of Ethereum, and DeFi is only one of them. But the point that I made in the report was really about the economics of Ethereum. And if you look at the margins, right, the fees and the throughput that runs on the Ethereum platform, it does look more like a bank or a financial services company than it does a software giant with 30, 40, 50% profit margins. Instead, it's low single digits, and that's perfectly fine because the goal is to process all sorts of high value settlement and all sorts of transactions, whether that is decentralized financial applications or payments that settle right on the layer one Ethereum core blockchain, or whether the Ethereum platform is acting as a secure settlement layer for some of these other smaller blockchains, these roll-ups as they're called, that are ultimately going to settle transactions and manage other types of networks, and then ultimately port over to Ethereum their subledgers. So almost like the correspondent banking versus kind of local bank, you'll have a system where Ethereum is used to settle high value transactions and any type of application settlement really. And then the details or the specific types of applications might run on their own differentiated kind of unique subledgers, but still benefit from that overall ecosystem security. So that's going to be, I think, one of the big things to watch this year is which other complementary blockchains besides Ethereum are processing most of the transactions, because the Ethereum ecosystem post-merge is certainly far in the lead.
Okay, that's all for Crypto World today, but we are back again tomorrow and we will see you then.